We've just witnessed a financial event of historic proportions. On June 12, 2026, SpaceX completed its initial public offering, or IPO, on the Nasdaq under the ticker SPCX. And with it, Elon Musk officially became the world's first trillionaire. It's a staggering headline, one that immediately sparks a question: how does a company, even one as ambitious as SpaceX, translate into such immense, unprecedented personal wealth through a public offering? To grasp this, let's first consider the fundamental nature of a company's value. Before an IPO, SpaceX was a private entity. Its valuation was determined by private funding rounds, where a handful of sophisticated investors negotiated a price for a slice of the company. Think of it like appraising a unique, sprawling estate. You can estimate its worth, but until you divide it into smaller, standardized plots and offer them on an open market, that valuation remains somewhat theoretical, a figure on paper. Now, imagine that estate being not just a house, but a multifaceted enterprise. SpaceX, for instance, is far more than just rockets. By February 2026, it had merged with Elon Musk's AI startup, xAI, creating a combined entity valued at approximately $1.25 trillion in the private market. This integrated company brought together the launch capabilities of Falcon and Starship, the global internet constellation of Starlink, and the burgeoning AI technologies of xAI. Each component contributed to a complex tapestry of projected future revenue and strategic dominance. The IPO, on June 12, 2026, changed everything. It took that privately estimated value and subjected it to the dynamic, liquid mechanism of the public stock market. SpaceX targeted a valuation of around $1.75 trillion to $1.8 trillion for its debut. The company offered 555.6 million shares at a fixed price of $135 each, an unconventional move for such a large offering, aiming to raise a colossal $75 billion. This initial price point, however, was just the starting gun. As shares began trading, the market's enthusiasm drove the price higher, and by market close on that historic day, SpaceX's valuation soared to a monumental $2.1 trillion. So, where does Elon Musk's trillion-dollar fortune fit into this? Fundamentally, it's a direct consequence of his ownership stake. Musk holds approximately 42% of SpaceX's equity. If we take the post-IPO valuation of $2.1 trillion, his 42% share translates directly into a net worth exceeding $880 billion from SpaceX alone. And when combined with his other substantial holdings, Forbes estimated his total net worth at $1.1 trillion at the close of trading. But there's a crucial technical detail here: his control. While his economic interest is 42%, he commands an even greater portion of the voting power, between 82.4% and 85%, through a dual-class share structure. This means public investors buy into a company where one individual retains overwhelming decision-making authority, a structure common in tech giants like Meta and Alphabet, ensuring strategic continuity aligned with the founder's long-term vision. Now you might be wondering, how can a company achieve such a staggering valuation, even reaching $2.1 trillion, when its financials show a net loss? SpaceX reported a Q1 2026 net loss of $4.28 billion, despite $18.7 billion in revenue for 2025. This is where the forward-looking nature of public markets, combined with the underlying technical strengths of the business, becomes paramount. The market isn't just valuing past performance, it's betting on future potential. Within SpaceX, Starlink is the undisputed financial engine. In 2025, Starlink alone generated $11.4 billion in revenue, accounting for 61% of SpaceX's total, and critically, it posted an operating profit of $4.4 billion. By February 2026, Starlink had surpassed 10 million active customers. This segment, with its growing subscriber base and increasing revenue from enterprise sectors like aviation and maritime, projects robust profitability, with some forecasts suggesting $20 billion in revenue for Starlink in 2026. The losses, on the other hand, are largely attributable to the massive capital expenditures required for the ambitious Starship development, and the buildout of AI infrastructure following the XAI merger. Investors are essentially funding these long-term, high-risk, high-reward ventures, believing in the eventual payoff of fully reusable spaceflight, orbital data centers, and advanced AI systems. The IPO itself, raising $75 billion, is earmarked to fund this further R&D, AI infrastructure, and Starlink deployment. The valuation multiple is also astounding. At its IPO valuation, SpaceX traded at roughly 94 times its 2025 revenue. This aggressive multiple reflects the market's profound belief in SpaceX's disruptive potential across multiple trillion-dollar industries: space launch, satellite broadband, and artificial intelligence. The global space economy itself is projected to reach $1.8 trillion by 2035, with commercial enterprises driving significant growth. However, it's not all pure mathematics. The IPO process involves a careful dance between investment bankers and market psychology. The pricing aims to attract investors while maximizing capital for the company. While the IPO establishes a public market price, founders and early investors typically face lockup periods, usually 90 to 180 days, preventing them from immediately selling a large portion of their shares to avoid flooding the market and depressing the stock price. Nevertheless, the IPO instantly quantifies their wealth in a way that private valuations simply cannot. What we've seen on June 12, 2026, isn't merely a stock market debut, it's a testament to the immense power of market belief, technological vision, and the complex financial engineering that allows private ambition to manifest as public, unprecedented wealth. The geometry of value in these scenarios is not linear, it's exponential, fueled by a collective imagination for what's possible in the future.